Should you buy property in your personal name or in an LTD? Well, we're going to explain the pros and cons for both in this video, so make sure you stick till the end and you'll know which one to do.
Who is this video for? Now, if you're looking to invest into property,
you already have a couple properties and you want to expand,
or if you're just curious about property investing and tax. Now remember, this is not financial advice.
Yes.
Do not sue us, speak to an accountant. I mean, he is an accountant.
speak to him.
But he's not giving you financial advice right now. You have to pay him for that.
Yeah, not for free. I'll give you my accountant. Just email me. My email's down below.
Yeah. So yeah, speak to a proper accountant. But this is just from our knowledge and basically from him. So if anything in this video is wrong, it's on him.
Sue him. The first reason why you should buy a property under an LTD as opposed to just buying out in your personal name is for tax benefits. Now, this isn't about avoiding tax or evading tax or any of that illegal business, even though avoiding tax is not illegal per se, but evading tax is. But it's running your business in the most tax efficient way. So when you open an LTD, you're basically a separate entity from your company.
so any income you get as a limited company will go into your company's bank account as opposed to yours. Now, you still have to pay 19 to 25% corporation tax, but it will look something like this. If you're earning £55,000 in your personal income, you're already in the higher tax bracket. So now if you increase that by £1,500 a month from your rental income because of your buy-to-let in your personal name, your personal income is now shifted from £55,000 a year to £73,000 a year, which means you're now paying 40% tax on that £73,000. That's not even including national insurance. Whereas if your rental income is coming into a limited company, you're only paying 19% on that extra £1,500 a month.
The second reason to grow your property portfolio through an LTD as opposed to your personal name is something called Section 24 tax. Now, Section 24 tax changed how landlords could claim tax relief on their rental income. Before this change, landlords could deduct mortgage interest and other finance costs from their rental income before calculating their tax liability. But after Section 24, unfortunately, this is no longer the case, and landlords can no longer deduct these costs directly from their rental income.
Screw the government.
Yeah, literally. Instead, they can only claim a basic rate tax reduction of 20% on their mortgage interest costs. And now this means that landlords have to pay tax on their gross rental income instead of the net, which can lead to higher tax bills and potentially push them into a higher tax bracket. However, if you have an LTD, mortgage interest is considered a business expense. So that can be deducted from the company's profits before you calculate your corporation tax. And that's not the case if you own personally under Section 24. So second reason is, well, I guess it's more tax benefits, but because of Section 24 tax, you want to be able to deduct those mortgage interest payments and then calculate your profit, as opposed to having to abide by Section 24 under your personal name.
And the third reason is limited liability. Now, if, for example, you owe someone money or something's gone wrong in your business and you're in a bit of a sticky situation, you are not personally responsible. Your company is, which means your personal assets will not be touched. However, your company assets will be. So you are protected from your personal assets. So that your dad's home that got given to you, that jewelry that was given to you, all of these things that you have are protected.
Now, this does add a layer of protection for yourself. However, if you decide to go out and take a bridging loan, often from what we've heard, they will ask you to sign a personal guarantee, which kind of negates that benefit. So I guess it's not as useful as it sounds. In some cases, it will be very useful, and in other cases, it won't matter, because if you're signing a personal guarantee, then your personal assets can come after. But it's definitely better to have it than to not have it.
And if you want more information on bridging, check out our TikTok and our Instagram. We've posted a couple of videos on bridging there.
All right, now as a fourth and final point, it could potentially be worth it to buy a property under your personal name. Now, this is only the case where after your rental income, you don't go into the higher tax bracket, which means that you're still at the basic rate tax paid. In that specific circumstance, it practically is the same thing, whether you do it under a limited company or under your personal name. The only downfall of it is under a limited company, you're going to have to do company tax filings and all of the palaver. So it won't make as much sense because it'll be more expensive to run a limited company rather than running it under your personal name.
But that's only if you want to buy one property.
Yeah.
If you want to buy multiple, then definitely do it under an LTD. If you only want to buy one, then it may make more sense as long as you're not pushed into the next tax
Yeah.
bracket.
See, we see.
Once again, it's not financial advice. Don't come after us. Come after him.
Did you just interrupt?
Okay, it's not financial advice from him.
Did you
either.
just interrupt me?
Yes. Make sure you like, comment, and subscribe. All right, go on.
No, it's done now. Make
Okay.
sure you guys like, comment, and subscribe, and we'll see you in the next video.